What's up, everyone? All right, so in today's episode, I'm going to give you my day trading watch list for Monday morning, and I'm going to give you a game plan of how we're going to try to get April off to a really strong start. Monday, last day of March, so we're going to put it in the books, and then we're going right into April. Now, you may have been tuning into my daily recaps every day this week, and if you have, you know that on Tuesday, I had my first red day after 76 consecutive green days in a row. So the previous red day was the end of November. So I went like 3.5 months without having a red day. And then I had a bigger red day on Tuesday. I was down $28,000 in one day. And the thing that was disappointing about that was it was at least partially avoidable. It was certain that I was going to have a red day because I had a bad trade, a bigger loss, and there wasn't enough time to recoup that loss focusing on A quality setups. But I made the day worse by reducing my quality standard, trading outside the time of day I typically make the most money, and kind of grasping at straws, throwing a Hail Mary pass and hoping I would connect and maybe cut the loss in half or even potentially go green. And instead, I nearly doubled the loss on the day. That's a very typical thing to happen when you reduce your quality standard and you start getting desperate. And that's what happened to me. The issue was, well, I didn't want to break the green streak. But after locking up the red day, I switched my focus a little bit and I said, I had a red day. I'm down 28,000 on Tuesday, but I still have a chance at having a green week. And I'm certainly green on the month of March. So big picture, let's not let one day ruin everything. And that's really important when it comes to trading. So as we come to the beginning of a new month, this is an opportunity to start fresh, which I think is really nice. Now, for me, oftentimes at the beginning of the month, I get really excited because I'm like, all right, I get to put March behind me. The things I did right, okay, but things I did wrong, putting them behind me, and I get to start April off with, kind of a new attitude. This is what I'm going to do each day. But what sometimes happens is because there's this pressure of getting myself into the green as quickly as I can for the month of April and sort of building that cushion, sometimes again, that pressure creates the willingness to reduce quality threshold a little bit. It's kind of hard to be patient, right? It's like everyone's at the sort of starting line and you're like, okay, go. But this isn't just, trading everything that moves. It's about actually waiting, being patient for something that meets all 5 criteria of stock selection and that genuinely looks good. So while you might see other people getting on the leaderboard, getting green, and you're sitting there kind of waiting, there could be that sense of impatience. How long am I going to be sitting here waiting, right? And then finally you just say, forget it, I'll just take this. You go red, and now you're going you're going the exact opposite direction. So I want to talk about what we can do to get April off to a good start, knowing that there are some mental sort of traps that we can fall into in terms of the way we're thinking about the month that can work against us. All right, so now you may know already that right now at Warrior Trading, we've got our anniversary sale going on. It is the 13-year anniversary since I created the Warrior Trading blog back in 2012. So this time of year, for the past several years, we've been hosting an anniversary sale to celebrate this special time of year. So this sale's going on right now. We've got discounts on our Warrior Starter memberships and our Warrior Pro memberships, so I encourage you guys to check them out. The sale will be running for another week, so it's going to end on Tuesday, April 8th. But of course, you can sign up anytime between now and then. So if you decide to take the leap and become a member, I'm going to give you a quick walkthrough of how to get logged in so you can be, of course, going through the classes and watching me trade on Monday morning. So over on the top corner of the website, there's the members access, which is where you'll see your dashboard. So if you click on that dashboard, I've already got it open right here, you'll see these sort of 4 menu items. You've got the community, the chat room, stream, day trade, dash. You've got our trading simulator. You've got the education, which is where you watch the classes. And then you've got the mentor sessions, the mentor sessions right here, which is where you can tune in to the live mentor sessions that we host throughout the week. So probably the first thing you want to do right after you join is view some of the courses in the education portal. So if you click on that button right there, that'll open our education portal where you can go and choose your learning path. So if you're a Warrior Starter member, you'll only have the starter. If you're a pro member, then you'll just have the pro. I have access to all of them, so I can go through them, so on and so forth. So anyways, you'll go into the Warrior Starter learning path, for instance, and then you can watch an onboarding call that we've recorded for you to help you get started. And then you can jump right into chapter 1. So you can start getting right into the classes, and you could do that over the weekend. You could do that, of course, any time of the day or night. even if the market is closed. You can start going through the classes and getting yourself up to speed with the way I approach day trading. Now, once you're ready to join the chat room, you can click here to enter. So that's this button right there, that blue button. So you click there to enter. And when you open the chat room, this will open, give you a unique link that you can log into. So it's going to send you over to our platform. And when you get logged in, you accept our disclaimer right there. I'm going to go full screen on this window, and I automatically have additional windows that pop out. So I've got a window there, I've got a window there, and I've got a window right here. So when those windows pop out, I drag them over to my other monitors, and this is my layout. Now, of course, if you want to use my own, the layout that I've created, what you would do is you would just go to that little settings widget right here. You would go to layouts, and you would load one of the saved layouts. So we've got some saved layouts right here. But you could also create your own layout by dropping and dragging different modules around. So we've got the scanners, we've got the charts, and you can sort of set this up the way you'd like. All right, so we'll start by looking at PRTG. This is the stock that I was watching on Friday. And of course, I traded on Friday and did pretty well on. Oh, and by the way, if you want to, once you open the small cap room, if you want to open my broadcast, I'm just going to start my broadcast just so you can see what it looks like. So I'll just start the broadcast there. So when I start my broadcast, that's going to go to live. It says small cap room is now broadcasting. You click on that, and then you can see my broadcast. It'll come through right here. You could pop it out into another window, and you could put it up, in another browser or monitor or whatever the case is. And then when it's open, you see right there. Okay, so that I just want to make sure you guys all know how to open my broadcast and get tuned in for Monday morning. So I will start streaming at about 7 a.m. Eastern Standard Time. That's the time I begin each morning. So that's what you can expect from me. All right. So PRTG on Friday, this one, this was interesting. It actually started squeezing up on Thursday after hours, as you can see right here. They had news that came out and it squeezed up 100%. It basically just shoots right up from 5 to 11, sort of stair steps down, and then squeezes at about 7 a.m. up to $13. And this was where I traded it right here. Now, what I decided to do going into the open was be very cautious with it. And I'm really glad that I did, because this right here was a nasty rejection. What I've noticed recently is that we've been having some really good opportunities between about 7 a.m. and 9:30. And then often at 9:30, we see a little profit taking. And I think what happened in this case was that there were some people who bought this after hours on Thursday, hoping that it would, go to $20 or whatever on Friday morning. And so they set their orders not to execute pre-market, but they used good till cancel orders. And I think a lot of people ended up getting stopped out right here. And that's where people bailed. So you got this sort of big flush of market orders that went through at the open. Remember, there's no market orders pre-market, only after the opening bell. So I think that was a little bit of a unique dynamic related to the fact that this stock started its move in after hours trading on Thursday. So this is the stock that gave us a big move, but in fact, the majority of the action was Thursday after hours and then a little bit Friday pre-market, and then it became a bit choppy. MLGO, this one continues to be, a thorn in my side. It moves, but it's difficult to trade. It's very volatile, big red candles, big green candles. So, I see it made another move on Friday, but I struggle to get confident on it. Unfortunately, this stock is at a price range where I'm really exposing myself to a lot of risk, because it's so easy to jump in it and then suddenly be down 50 cents a share, especially on some of these false breakouts. So if we look at my calendar for just last week, this is my, let's see. So this is my year so far. It's a great year. I'm off to a really great start. This is just about the end of Q1, and I just have that one red day in March. I just wish it wasn't such a big red day, but it is what it is. Fortunately, I was able to recover those losses and finish the week up 19,000. But I'll tell you, I had pretty aggressive goals coming into the month of March. Look at February. February was phenomenal. I was up almost $500,000. It was like back-to-back, nearly $100,000 weeks, almost every week. So coming into March, I kind of expected it would continue to be that hot, but it cooled off pretty quickly at the beginning. And then going into the second week, it was still slow. The third week picked up a little bit. And then the fourth week, had this big loss here after a slow day on Monday, and then was kind of on the defense. So this whole month, I never really was able to get myself into the driver's seat in a big way. But I started by building a cushion and then, kind of just held on to it. So this is a month where I feel like you really had to kind of pace yourself, just get in, get green, and get out. So one of my big tips that I would recommend and encourage for beginner traders is to try to be quick. So what I mean by that is when you're looking at a stock and it's coming up on the scanner, it's squeezing up. Let's say we're approaching a $0.50 whole dollar setup. So let me get my whiteboard out here. So we've got a stock that's just had breaking news, let's just say right down here. So breaking news, and so immediately it starts squeezing up. One candle, two candles here. And this is probably a 1 minute chart. It could be a 10-second chart, but we'll just stick with a 1 minute. It pulls back for a minute, does a little doji. So I had a bunch of trades this week where I was watching this setup forming. And this on a 1 minute chart, let's just say. So on a 1 minute chart, I'm watching the setup forming. I know that this candle has, let's say, 20 seconds left before it closes. So what I'm looking for is the first candle that's going to make a new high. And so if this candle has 50 seconds left on it, then I'm really looking at the previous candle to make a new high, because this candle is not even close to finished closing. But when it has only 10 seconds left, 5 seconds left, that's when I start getting really focused on what was the high of that candle. And I had a couple trades this week where as this candle was about to close, I was like, okay, there's the high right there. Now I'm watching green on the tape, and then all of a sudden we would see this burst of green, and boom, it would pop right up. So let me show you PRTG as an example of that from Friday, because this is what I really want to get you guys focused in on, is knowing exactly where to buy and being quick to pay yourself and take the profit off the table. So this is the PRTG 1 minute chart right here. Okay, so this is what I'm talking about. So you get this squeeze up, you get 2, 4, 5, 6 green candles in a row. Okay, one candle pullback. So as that candle is pulling back right there, I'll just sort of put this right to here so we're almost watching this like as if it was real time. So we'll go to auto, we'll zoom in on this. Okay, so we'll remove all the remove drawings. So what's the high of this candle? So the high is 1047. You can see that by looking at that right there. So the high here is 1047 of this candle. So what I would do is I would actually enter my order at probably 1055. I'd give it a little bit of an offset with a little bit of slippage, knowing that the high of day was 1055. So I'm watching this, but right now I could potentially get in at 1036 if I wanted to, the current price, which would be a little bit of a premature entry to anticipate the first candle is going to make a new high. Now my max loss on the trade would always be the low of the pullback. So this is essentially a trigger candle where the high is my entry, the low is my stop. But the closer I can get into a stop, the better. So this pulls back a little bit more, but it doesn't break the low. And so now the high of this candle is what? 1031. So now at this point, 1031 is an even better entry. So it's better not to anticipate, because if I'd anticipated and got it in here, then I might have stopped out. And I never actually got the confirmation of that first candle making new high. But now as it comes up 31, so let's watch this. There we go. And I saw a bunch of you guys say in the chat room, Ross, this was one of the best trades of the week. You got in right here at 31.32 and immediately we're up 50 cents a share. It goes from 1030 up to 1080. Boom, instant winner. Awesome, nice job, you guys. All right, it's got a high of 1090. It pulls back now, it's got a high of 1106. Okay, it's got a high of 1110. So it's kind of grinding a little higher. Those aren't entries, really. Those are just, it's going a little higher. Now it's pulling back again. Okay, so what do we mark the high as? 1110, that's the high. What's the high of this candle? 1103. Okay, and what's the low? About 1080. So now we're starting to get dialed in. If the next candle breaks 1103, that's an entry. So watching, it breaks 1103, that's an entry right there. Sweet, awesome, squeeze all the way up to 12. Fantastic, another great trade. And this is where I was trading at this yesterday morning. So I'm recording this, by the way, on Saturday. So you guys will watch it on Sunday, but nonetheless. So then it pulls back here. The high of this candle is 1185. So now watching first candle to make a new high. Now, the only risk here is that first and second pullbacks are typically my favorite. And now as we're going into the third pullback, I always approach this with a little bit of caution because the third pullback doesn't always work as well. In this case, look at that. Comes up to 12, isn't able to break through the high, so you get a double top. Another test and a fail, and then it busts through. Now that kind of surprised me. And note the time. The time on this was 7 a.m. So this was when a lot of retail traders came online. And I think a lot of them jumped in, and that's why we had that big burst of volume. So then we got that pop all the way up to 13. All right, so then it goes sideways, or sort of tops out, grinds a little higher, and then starts to pull back. So what I would encourage is for you to get really dialed in on that setup right there. That is the micro pullback setup. And to get really disciplined about cutting the loss when it doesn't work and about taking profit off the table when you have it. These are trades that some of them are less than a minute long. These are very quick. I mean, these are 2-minute long trades, basically. These are very quick trades. So be faster even than you think you should be, like than you need to be. Be really fast. See how fast you can be. See how quick you could be. And so if you're going to see how quick you could be, you've got to make sure you don't get in too soon because they're just going to be sitting and waiting. So you're going to be a little more patient on your entry. Wait for it, and then boom, send that order. And then what you're expecting is immediately when you send that order that you got in at exactly the right price. Because if you got in at the true apex, you're going to get this instant resolution. And just like that, boom, it pops up, and then boom, you're paying yourself. So here's the thing that I learned about trading. A lot of people overcomplicate it, and a lot of people overtrade. Less is more. You only have to take a couple of trades like that each day to do really well. 3 trades like that. That could be more than enough to be a profitable trader. So how many trades did you take last week? A couple hundred, maybe? I know some of you might have only taken 5 or 10, but I bet some of you out there took hundreds of trades. And if you didn't come out on top and you didn't make money, what was it all for? So who made money? The broker, payment for order flow, those institutional traders, the exchange, but not you. So less is more. Get in, get out, pay yourself. This was one of the biggest turning points for me, was realizing that I had a setup that was working consistently. It was kind of like this, but I had a setup that was working consistently. And if I just focused on trading that, even if I only took 3 trades a week, I could make my $1,000 weekly goal, $300 per trade. So here's what I told myself. When I see that A quality stock and that A quality setup, because I know I'm only going to see it a few times a week, I'm going to hit it with bigger size. Now that worked for me for my risk tolerance. It may not work for you, but that's what I did. I said, I'm going to trade less, but on each trade, I'm going to weight it more heavily and I'm going to be more aggressive. And that was huge in me turning the corner. Because what I was doing prior to that is I was trading a lot of different things. I was over trading. I was doing a little of this, a little of that. I was trading options. I was trading large caps. And you know, I'd trade small caps, but I wouldn't weight any trade really heavier than the other. And so although I was consistently more profitable on a certain subset of what I was trading, I didn't really know that because it was buried under all the other trades that weren't working. It really took me actually going and looking at my metrics and sort of figuring out, wait, if I'm only trading stocks at this price range at this time of day, I'm profitable. So then I was like, all right, what if I cut everything else out? Like, let's just go back to basics. And I was kind of at that point where I needed to really press the reset button in a big way and get I was at rock bottom. So it was like, let's just get this thing like functioning in the simplest way possible. One strategy, and just do that for a couple weeks. And that, boom, all of a sudden it's like, whoa, here we go. I'm making some money. So, you know, 3 trades, just like that. There were 3 great trades on this on Friday. And that, for any account size, should have been more than enough. So even with a small cash account, 3 trades, boom, you're in, you're out, you're done. So get in, get out, be done. Don't overstay your welcome. And, you know, that means being able to be consistent about showing up at the same time each day, trading the window when, you know, you most predictably will find these opportunities, which for me is generally between 7 a.m. and 9:30. Now, I will trade a little bit later into the morning on days when we have action. And something that I noticed this week was that stocks like MLGO, it didn't squeeze pre-market. It really did its biggest moves after the opening bell, which I thought was really interesting. So that was kind of weird price action on that one. All right, so if we take a look at kind of the month of March, so Let's look at this month here. Now, I'm embarrassed to even show you my profit to loss ratio because I, of course, had a couple bigger losers. I had an $18,000 single trade loss. That was this week. That was very disappointing. So my average winners are 1,200. My average losers are now 965. Prior to Tuesday, I was with a much nicer profit loss ratio. But look at the average hold time of losers. Pay attention to that. 1 minute. I am ruthless. I cut those losses. I do not care. They're gone. Goodbye. The winners, 4 minutes. Okay. Now here's something else that's really interesting. If we look at if we compare, let's just compare, we'll do year to date. So we'll do let's see. So date range, year to date, year to date. So this is going to be losers. This is going to be winners, and we'll generate report. So year to date, so my winners, let's see. So averaging $1,700 on my winners with 11 cents per share. All right. So let's just jot this down for a second. So $1,700 and 11 cents per share. So my share size on this, I mean, we're like 16,000 shares, right? Approximately on the winners. These are on the winners. Now let's look at the losers. So on the losers, my average is $827 and I'm losing 8 cents. So 8 cents, $800, 10,000 shares. So you might ask yourself, well, wait just 1 second. How is it that your losers only have 10,000 shares, but your winners have 16,000? Seems to me like that doesn't make sense. How can you be so lucky that your losers are always on smaller size? Now, they're not always. I had a couple bigger losses, but on average, they are. And so this is the thing that I'm doing in my trading. When I start each day, each morning when I sit down to trade, I'm thinking about building that cushion, right? Now, the last couple trading sessions, I had to give myself this reminder. Is it going to come into focus? Nope. So I had to give myself this reminder of trading with 1 quarter to build my cushion. First, build my cushion before I get aggressive. Now, in the previous weeks, I've been a little bit more aggressive to start the day, trading with larger size, not full size, but more than just quarter size. But generally what I'm doing is I start each day being a little more cautious to build my cushion. And then once I have a cushion, I start to increase my size. So what I know is that on days where I'm red, my accuracy is less than 50%. So if I start first trade of the day in the red, then I keep myself at that smaller share size because the market doesn't warrant sizing up. So I accumulate a lot of those losses, the days where accuracy is lower, with smaller share size because the market's just not as forgiving. And then secondly, when I'm in a trade that's working well, what do I typically do? I add to my winners. I add to my winners, not to my losers. So when I'm in a winning trade, I'm likely to double my position. Rather than sell half, I often double. So now my share size is going up. And although my average winners are only a little bit bigger, with bigger share size, it makes a huge difference. So now I'm sitting here year to date over $1 million in profit. And it's in a large part because of this approach that I have to scaling in each day and to being very ruthless about just cutting those losses. So over $1 million of profit on the year right here, sitting at 70% accuracy. Okay, so I just kind of wanted to highlight that for you because I really do think it's important. Now, if we look at the month of March, we'll do this month. So month of March, let's look at some of the stocks I have made the most on. This is going to help us kind of like get focused in on, what's been working. GV, ADTX, PRTG. So I'm going to put these up on another chart or on another monitor. So GV. All right, GV, this is the one that is technically a Canadian company, but really is very connected to China. So I would really call this a China stock at this point. So GV, China stock. Okay, now that's its own sector. All right, ADTX. What is ADTX? So ADTX is a stock that we traded. It's a recent reverse split. So a recent reverse split, super low flow. It's a stock that is very volatile. Based, where is it? It's a U.S. company, Life Sciences. So This is in the biotech space. So biotech company, recent reverse split. All right, then we had PRTG. PRTG, biotech company. Then we had CRVO. CRVO, biotech company. All right, so now we're starting to get dialed in. OSRH, this one was biotech as well. So the sector that paid the most for me so far in March has been biotech. All right, so pay attention to that when we sit down and look at the scanners tomorrow morning, Monday morning. So if we see the first stock on the scanner is a biotech stock and it's priced between the price range where I typically make the most money, so we can pull up the price filter here, between 2 and 20, right? And then it's like, okay, here we go. We've got something to work with. So that's kind of, and of course, if it's early in the day, then I know I'm set up to do probably pretty well. So at this point, what I would say is that in order to get yourself off to a really good start for the month of April, you need to be able to know the things that I know about my trading right now, about yourself. So you should know your metrics. What's the price range I make the most money on? What's the time of day I make the most money on? Is there a specific setup that works really well for me? Now, if you're a beginner and you're still learning, then you can learn my strategy. You can practice trading my strategy in the simulator, of course, and make sure you follow all of the rules of my strategy. That way you make sure you're not deviating from it. So whether you're, trading your own variation of a momentum strategy and, that's fine, you just want to make sure you know your rules and you know kind of what your sweet spot is. So now in terms of what's the watch list for Monday morning, I'm going to pull up my after hours top gainer scanner. So this is the first scan that I run. And what I like to do is I like to just see, what was squeezing in the after hour session on Friday. Sometimes this will carry over to into Monday. So ADD, this stock, Color Star Technology. So it's got a pretty low float. What's the sector? So we got to pull this up. I don't know, providing online, offline music education. To be honest, I don't think that that's the right sector. I don't think that's going to work. If it was a biotech, I'd say let's keep it on watch. It's not a biotech. CDT, it's a biotech. All right. So this one priced a little lower than what I would do well with. I don't usually do well on stocks under $2 a share. So for me, the price is too cheap. I'm not going to trade it unless it gets above 2. Realistically, that might not happen, but you could tell that it's a stock that's been beaten up for a long time. So sometimes you have stocks like this that have been beaten up for a long time. You've got splits. You can have higher short interest as people just continually short them. Right now, let's see, the short interest on CDT, 700,000 shares is what it's showing. I mean, that's reporting pretty high compared to the float. So, but it's only up 15%. Interesting. We'll keep it on watch. So CDT on the side chart. But for me, it's not going to get interesting really unless it is a bit more expensive, which I know might seem counterintuitive, but when it's a little higher price, you typically get cleaner moves. There's a number of reasons for that, but I won't get into all of them right now. So XOS, this one popped up at only 12% to the close on Friday. Probably not enough. MYSZ, these all have lower floats, which is good. XOS was this a biotech? Let's see. Nope. So that's probably not going to work. MYSZ, we have traded this one before, but it's not always super easy to trade. The sector on this, yeah, again, this is, e-commerce stuff. So no. Bluebird Bio, this one is one that has made big moves in the past. Then the float's a little higher, 9.5 million shares. I wouldn't completely disregard it, but it only really ended up being up about 9% in the after hours. So I don't know if that's quite enough. We'll see. I'll keep that one on watch as a maybe. QNTM, this one bouncing up after hours, but it had sold off during the day. So that one's no good. So those are our after hours top gainer scan. So then I look at the continuation scan down here. So continuation scanner, this is going to be showing me the stocks that made the biggest moves in the last couple weeks. MLGO, yeah, it's definitely on the continuation scan, but we're up around $20 a share. It's getting too expensive. So now we're in a price range where I'm probably just not going to do well on it. It's just taking too much risk. So MLGO, I don't think I should mess around with it. Let it pull back for a couple days, then maybe we get another trade on it. Honestly, it probably needs news. If it had news, that would bring in the volume. Because what you have going on right now, the price is grinding higher, but the volume is declining. So that's a divergence there. When you have declining volume, it means the liquidity isn't going to be as good. So you're going to have bigger spreads. It's going to be harder to get in and get out without a lot of slippage, especially with big positions. Sure, 100 shares, 1,000 shares, maybe not too bad, but you try to do 5,000, 10,000, 20,000 shares, it could be bad. So your ability to scale up on it is going to be limited. GDHG, this is the one that one of the ones I lost on during the week, which adds insult to injury that it's back up in this area. But it was the right decision for me to cut the loss at the time. Even though if I had held it, I would no longer be red. I would have had to hold from, it was like $4 all the way down to $2. That's a 50% drawdown. You don't do that. You cannot make it as a trader holding losses like that. So I cut it for a $10,000 loss or $12,000 right here. Where was I in? I was in here. I probably cut it like here. If I held it all the way down to here, I probably would have been down 40 grand. So that would have been way too big. Would have come back up to break even, then back down to down 20 grand, then back down to down 20 grand, then back up to actually green, and then red, and then green, and then red, then green, then red, and then, green, but, be up $10,000. So I'd only be up I guess I'd be up about 16,000 if I was still holding it right here. But you don't risk 40 grand to make 16. That's not a good profit to loss ratio. And certainly to hold something over the course of several days is not worth the risk. So, if it has fresh news, that would be good. It would also be okay if it pulls back for a couple days and then goes higher. So GDHG, MLGO, possibilities. They're both Chinese. HFFG, float's too high, 43 million shares. I will say that it's made a big move, but the float's too high for me. I'm not going to try to day trade that. TRSG, lower float, lower price though as well. Probably leave that alone. DM, this one had some buyout talk, leaving that one alone. VVPR also had some buyout talk, but has come back down quite a bit. JYD, this one was moving during the week, kind of just grinding higher, but on lighter volume. Same with Ray. Those ones are too difficult to trade because they're just not, they're not liquid enough. And then if we take a look at the overall market, the S&P 500, market's coming back down a bit, right? So now, we've got 25% tariffs on new cars, imports. That's put a strain on the market. Although there's debate on which companies are the winners and losers of that, of those tariffs. It seems pretty much agreed that there's going to be a cost associated for everyone, because it's not just on the fully built cars, but on car parts as well. And of course, a lot of those costs will get passed on to consumers, but will result in probably more people buying used cars, because I don't think that there would be, I don't know, but I don't think a used car that was imported 10 years ago is going to be subject to any additional sales tax when you buy it. So I think we're going to see an increase in market on used cars. You could make a, kind of look at some of the companies that benefit from used car sales, Auto Trader, cars.com, some of those sites. There might be something in there, but in any case, the overall market, coming back down a little bit, we'll certainly have to see what happens. We sort of got back above the 200, and this is all sort of, the tariff talk. Some of the tariffs got pulled back a little bit, and then we got the new auto tariffs that came in. So these are the economic strains that are weighing on the market a little bit. And so, this is all the more reason to be a little bit more picky when you're looking at trades, and to focus on less is more. Get in, get green, get out. Don't overcomplicate it. So that's really my biggest, suggestion for you guys as we get ready to finish up the month of March and start a brand new month ahead. So For those of you guys who haven't already checked out our anniversary sale, I hope you do check it out. All of you guys who are members of Warrior Trading, I will see you bright and early Monday morning. I'll be streaming at 7 a.m. and I'll put a link to a couple episodes here and here that I think you guys will really enjoy. Thank you as always for tuning in. Remember, my results aren't typical and trading is risky, so please take it slow and practice in a simulator.